The New Great Depression, Winners and Losers in a Post-Pandemic World. That's the title of the book. It's off to a very good start. On Amazon, it's ranked number one in money and monetary policy, number one in wealth management, number one in economic conditions. So we have a very good star rating by Amazon users, but also selling very well in Barnes and Noble and other online sites and bookstores around the world. So very, very pleased with the result. This is the first book, and so far the only book, that looks closely at the pandemic and the economic depression. Now, there'll be a lot of books on the pandemic. Others are out there already. Doctors and epidemiologists and other experts will be writing about that. There'll be books on the economic effects of this, although interestingly, economists don't write that many books. Some do. Not counting textbooks, of course, but economists prefer to write papers and journal articles and so forth. But some will write books. But this is the only book that looks at both the pandemic in a scientific sense, epidemiological and virological, immunological, and also the depression in the economic sense. So I'm getting a lot of good feedback from readers because they like the way we connect the dots. Well, the Biden administration will do a lot of things from a policy perspective, different from the Trump administration. Many of the things the Biden administration will do will not have much effect on the economy or the pandemic. Now, that doesn't mean they're not important. You'll see big changes in immigration policy, return to open borders, Green New Deal. As I say, the U.S. will rejoin the Paris Climate Accord. The U.S. will probably try to find ways to resuscitate or revive the Joint Comprehensive Plan of Action. That's the Iranian deal on uranium enrichment. But all those things are important in various ways, but they don't bear directly on the economy or on the pandemic. So let's talk about that narrower subset. The Biden administration will come with a $2 trillion spending bill. This is in addition to the baseline deficit. The U.S. right now has what's called a baseline deficit of about $1 trillion, meaning if you didn't have any special policies and just continued what we're doing, we would have a $1 trillion deficit for fiscal 2021. Biden is proposing to put $2 trillion of additional spending on top of that, bearing in mind that in the final weeks of the Trump administration, they put $1 trillion, about $950 billion, but almost $1 trillion of added deficit. And then going back to last spring, April, May, and June, the Congress added $3 trillion. So 2020 and 2021, you have baseline deficits of $1 trillion for each year, $3 trillion of new spending in the spring and summer of 2020, another trillion just a few weeks ago, and $2 trillion more on the way. So that's $6 trillion plus the $2 trillion of baseline deficits. So you're looking at $8 trillion of deficit spending in the United States in these two fiscal years, but not much difference between the Trump administration and the Biden administration. Trump layered on $4 trillion. Biden's going to layer on $3 trillion and probably more on the way. None of this will do any good. The deficit spending will not do any good because the U.S. debt to GDP ratio is too high. That has behavioral effects. People will get their checks, but they won't spend them. They'll save them. But putting them in the bank might be a good individual decision, but collectively, you create a liquidity trap and the economy doesn't prosper, doesn't grow. So yes, Biden will spend $2 trillion more plus $1 trillion baseline deficit, but it won't do any good. Nothing will change. No, because confidence has been destroyed by bad public policy. People are afraid. They're scared. They've been told to lock down. They've been told to quarantine. They've been told to, do so many things that, or else they risk dying. Fatality and fatalities are high. I mean, the United States has had 400,000 deaths from the coronavirus. So I don't make light of it at all. I take it very, very seriously. But the fact remains, the spending doesn't work. The government spending doesn't work if the individuals who receive it don't spend the money themselves. If there's no lending and spending, borrowing, and consumption, the economy will not get a lift. And that's the situation today. Mostly misguided policies. The lockdowns have destroyed the economy. Lockdowns do not work to stop the spread of the virus, and that's not an opinion. There's very good evidence to support that, economic evidence, empirical evidence. I said that at the time I wrote the book last spring. I updated it in October, but there was enough evidence last spring to say that lockdowns do not work to stop the spread of the disease. But since then, there's been far more evidence. For example, in the United States, we never had a national lockdown. We have 50 individual states. So it was up to each governor. Some governors had extreme lockdowns, such as New York and California. Other governors had moderate lockdowns. That was the case in Florida. And at least one state, South Dakota, had no lockdown. The governor educated people, but left it up to individuals to decide what to do. Same thing around the world. Korea had an extreme lockdown. Sweden had what I would call a moderate lockdown. And some countries did very little, at least initially, such as Brazil. So we have all these examples, all this data. And what the data shows is that lockdowns have no material effect on the spread of the disease. In other words, lockdowns don't work. It didn't matter if you had an extreme lockdown, a moderate lockdown, or no lockdown. Your experience with caseload and fatalities adjusted for a population was about the same. So lockdowns do not work to stop the spread of the disease. That's clear. They do destroy economies. So we've destroyed economies for no good reason and destroyed confidence. And the effects of this will last not for 30 weeks or 30 months, but for 30 years. Well, we know who has suffered the most, and that will continue to be the case. So travel, tourism, casinos, cruise ships, restaurants, salons, a lot of small business. And the problem is that, for example, people say, well, stock markets are at an all-time high. Stock market indices are at an all-time high, which is true. And they've recovered their losses from the pandemic crash in February, March, which is true. But there's never been a time when the stock market was more out of sync or disjointed from the real economy. They've gone completely separate ways. And let me be specific. In the U.S., our leading stock index is the S&P 500. There are 500 stocks in the index. However, it's what's called cap weighted, meaning your market capitalization as a company determines your impact on the index. So the S&P 500 is really the S&P 7. There's 7 companies, and we know what they are. It's Amazon, Apple, Facebook, Google, Netflix, Microsoft, and Tesla. Those 7 companies alone are 40% of the market capitalization of the index. They're also the least affected by the pandemic because they're digital, they're virtual, they're entertainment, they're streaming, they're software, et cetera. They don't rely on bricks and mortars types of stores. So, and some of them actually are doing better than ever. Amazon, for example, because people don't go out shopping, they shop online. So those 7 stocks have taken the index higher, attracted new money that drives the price higher. So you have a bubble dynamic going on. Meanwhile, in the real economy, by real economy, I'm talking about small and medium-sized businesses. The political elites say, well, who cares if we shut down a restaurant? You only have 20 waiters. They'll get along. The restaurant will reopen at some point. That's very condescending. The answer is I care, and certainly those waiters and waitresses and bartenders care. But more to the point, small and medium-sized business collectively, individually, they may be small, but collectively, they are 50% of all jobs in the United States and 45% of gross domestic product. When you crush small business, you are crushing the economy, and that's what we've done. So I don't really care if the stock market goes to new highs. Sort of like the perception and reality. The perception is here with the stock market index, but the reality is down here with the crushing of small business. Reality always wins. That gap will close at some point, but not right away. I mean, this bubble can continue for a while, but meanwhile, the real economy has been destroyed by lockdowns that don't work. Well, certainly you always need commodities. So agriculture will grow. People in the water business Mining output will grow. There's a lot of demand for gold and silver. Yeah, in virtual industries, probably Hollywood will bounce back at some point. Although the fact that the theaters are closed, so we've destroyed the theater industry. But movie production can go online, streaming on Netflix and Disney and other channels. So that seems to be doing well. I'm not saying that every business will crash and burn. That's not the case. And by the way, that's not what the word depression means. A lot of people, they're familiar with the word recession. Recession is technical. It's 2 or more consecutive quarters of declining GDP. And we had a recession, a bad one, in the first half of 2020. We had a bounce back, strong growth in the third quarter, weaker growth in the fourth quarter of 2020. The year as a whole will be down, but the recession was probably over around July 2020. But we're in a new recession right now, today. And the reason for that is the disease has come back. The pandemic is worse now than it was last spring. Everyone remembers, March, April, May 2020, the lockdown, the quarantine, et cetera. A lot of fear, some measure of panic, and that was bad. Right now, the caseload is 10 times worse. The fatality rate is double what it was. The pandemic is out of control, and I know vaccines are coming, but the disease is spreading faster than the vaccines can be administered. So we're back in a far worse stage of the pandemic. That means new lockdowns. They don't work, but they're being done anyway because the politicians need to put on a show. And so I expect the US economy will be in recession again in the first quarter of 2021. Well, I'm actually the co-founder of a company that's building predictive analytics systems using artificial intelligence. So that is a powerful tool. But robotic trading, robots are fairly dumb. I mean, they do what they're told, but if they're told the wrong thing, then they'll do the wrong thing. So the potential for the technology is huge. I agree with that. But any application of technology, artificial intelligence, any system, predictive analytics system, let alone a trading system or a risk management system, no matter how good the technology is, the system is only as good as the assumptions and the models behind it. And the problem with risk management, Wall Street does not understand risk. Central bankers do not understand monetary policy. They have all the wrong models. They're using the Phillips curve, which is nonsense. They have something called NIRU, which doesn't exist. They literally make things up. They assume normal distribution, but events are not normally distributed. They assume the future will resemble the past. That's largely not true. That's why shocks occur. They assume the prices move from one level to another smoothly and continuously. That's not true. They gap up or down very quickly. So is the technology potentially powerful? Yes, but it's not being used to good effect because the models are wrong. So if you have the wrong model and you code that in your predictive analytics and your artificial intelligence, you're going to get the wrong result. It's not an investment of any kind. It's a speculation. People ask me if I like Bitcoin. I tell them I prefer roulette because I enjoy the game and you can have a nice drink while you're playing. Bitcoin has no role in the future of the international monetary system. Now, there is another development, which is more important, which are called central bank digital currencies. These are cryptocurrencies, if you will, but they're launched and controlled by central banks. So a digital, crypto euro, a crypto US dollar, a crypto Swiss franc, et cetera, and other major currencies, sterling and Japanese yen and so forth. These are really not different than the underlying currencies. The technology is different, but the currency is the same. So a crypto euro is still a euro. A crypto dollar is still a dollar. By the way, the dollar has been the leading cryptocurrency since 1980. That was the last time we issued paper treasury notes. You might have a few dollars in your pocket, but the overwhelming majority of all payments, trading, foreign exchange, transactions, et cetera, are all digital. Digital dollars, and all that message traffic is encrypted. So the dollar has been a cryptocurrency since, as I say, the early 1980s. Blockchain technology has been around since the 80s. It's not that not that new and not that interesting. Has some applications, but it's not that big a deal. But as far as the central bank cryptocurrencies, the point is with the digital euro and the digital dollar is to eliminate cash. I like to say if you're going to slaughter pigs, you have to get all the pigs into a pen first and then lead them into the slaughterhouse. So the central bank digital currencies are a digital slaughterhouse. Get all the savers and investors into a digital form with no cash, no way out of the pen, and then slaughter them with confiscation, negative interest rates, taxation, and seizures. It's also a brilliant way to conduct surveillance because we already have facial recognition software, and people, you can be tracked with your credit cards and your debit cards, et cetera. Your whereabouts is tracked with GPS, so there's not too much privacy left anyway. But one of the last domains is a cash transaction. But if you eliminate that, then everything's digital, and then the government authorities not only know where you are and what you're doing, but what you're buying and how much you're spending, et cetera. That's all on government computers. So that would be a way to conduct surveillance. And then when you want to punish people for incorrect political views, dissenting activities, criticism of the government, et cetera, you can begin to limit their options. So you're not able to travel, your kids can't go to school, they'll put locks on your account. All this is happening in China today, and the other countries won't be far behind. But the central bank digital currency is a way to do that. Well, I would separate what's actually going on in the world from what global elites would like to have go on in the world. For the latter, readers could look at a new book by Klaus Schwab. Klaus Schwab is the founder and CEO of the World Economic Forum, which conducts the Davos conference, which is sort of a treehouse or clubhouse for global elites. What happens at Davos? The important things don't happen on the stage; they happen in private dinners and gatherings, along the fringes of it. But his new book is called COVID-19, The Great Reset. And it's basically the playbook for the global elite efforts to impose global governance, global money, and global taxation. If you want a global solution, you need a global problem to solve. They were trying to use climate change, but climate change is mostly a fraud. Climates do change over periods of thousands of years due to solar activity and volcanoes and other, slow-moving forces. But this nonsense about CO2 emissions. I mean, CO2 is a trace gas. Scientists aren't even sure what it does, but it is food for plants. There's a good argument that we could use more CO2 to help plants thrive. But that aside, it never caught on with the public because it was mostly a fraud. So their new stalking horse, if you will, is the COVID-19 pandemic. You basically, which is also global because pandemics don't respect borders. So you need a global problem. They have a global solution, and Schwab's book is the playbook. So that's the plan, which again is just steps on the path towards world government and world, kind of a world dictatorship by the elites. Now, then there's the reality. The reality are some of the things we've talked about, which is declining economies or economies that grow below potential. It doesn't have to be a continuous recession, but a depression means low growth, slow growth, high unemployment, not much of a bounce back, et cetera, combined with behavioral effects, adaptive behavior that will linger for 30 years. That's the reality. So we've got a nice kind of crack up coming between the global playbook and the reality of slow growth and a lot of fear and depression on the part of populations. It's mostly negative. It'll destroy, and it is destroying the commercial real estate market. If you had 10 floors in an office tower in London or Midtown Manhattan, and your workforce had to work from home, no one would have ordered that or required that before the pandemic. But when the pandemic hit, people really had no choice. What they discovered is that it works. It actually works fairly well, and workers like it, and employers are comfortable with it. So now what you'll say is, well, instead of 10 floors, I'll take 2 floors. I'll have I don't even need an executive suite, but I'll have, like a locker room, not like a gymnasium, but like an attractive locker room, but people will keep their, sweater and a tie or a scarf or whatever and a laptop, et cetera. And you'll have offices that are booked by the day or the week, as the case may be. So I'll call up and say, look, I need to reserve an office 2 days next week to meet a client. I'll show up, take my stuff out of the locker, go in the office work, drop it off, and go home and work from home again. Well, if you shrink office capacity by 80%, which is what I just described, first of all, it's going to hurt the building, hurt the commercial real estate market. But what about the maintenance people? What about the food trucks, the restaurants, the public transportation, the lunchtime shopping, after hours, after work, dinner, bars, et cetera? All of that gets destroyed. And so the commercial real estate market is in a state of near collapse. That will get worse.